All right, welcome back, YouTube. Welcome back, everyone. In today's video, I wanted to do a quick price update because I know I received a lot of questions about the extreme swings that we're seeing in Dogecoin and amongst crypto altogether, the Ethereum merge and stuff like that. Already made a video covering what I thought about the Ethereum merge, but I'm going to focus more on price action and why we're seeing the swings that we are right now. And these are the same support levels, the bottom three that we've had over the duration of this bear cycle at the lower end. So what we're looking for right now is to gather whether or not we're going to have support and see if these macros are going to fit all together. And the biggest thing is going to be whether or not we're going to get these macros to align. And as we know, I won't say threatening a reversal here, but it looks like the Fed is backtracking again. We do have our Fed meeting later this week. I think it's the 21st and 22nd. And as we know, the Fed, as right now, the markets are pretty much pricing in around a 0.75 basis point hike. Not saying this can't go higher, but that's what's causing a lot of the swings here because the macros are uncertain. Macros are uncertain. The retail is uncertain. The institutional money is uncertain because it's hard to get bullish now because the Fed is like, yeah, last Fed meeting, everything's all great. We're going to be at 0.25 by the end of the year. And now that's not the case. So this causes extreme swings here. So let's take a look. So we're pretty much, I won't say we're trading sideways. We had like some rallies in here, obviously, but we're literally rallying in between our bottom two support levels. Literally from directly below it, we'll have a slight break, get a rejection, run up, and pretty much get a rejection off of the mid-level of our rejection. So right now we're roughly sitting at the bottom level of support. And you can find evidence of these swings here just with the uncertainties in the market, even with Bitcoin. And you can see it here as well. Obviously, it's just Bitcoin has a lot more volume, so you'll see just an extreme version, but literally identical things running from lower end of support to the higher end of support. You have a break to the upside, and then of course it fills the gap immediately down, and now it's like around like mid tier. So what are we waiting on? In order to get evidence of a reversal or stuff like that, it's one of the reasons why I was telling people don't get excited about the 1 month that we had the inflation kind of like retract. We're going to have to get evidence of a trend here. And as the same way that I chart things is the same way that I look at trends in the macro area to test. We need 2 tests on a chart to establish a trend, a minimum of 2 tests. And I would need 2 marks in the macros here to establish a trend in the macro, to establish a trend here. And we only got 1. And obviously that trend has already been broken. So that is just a little note that you can kind of take with you going forward. So as it looks like we're going to be pretty much put back in wait and see mode for the macros because I don't think that it's a slim possibility. I think it's around like 18% that people are saying they're going to go as extreme as a full point. I don't think they're going to do that right now. I think they're going to go with a 0.75. I just think that the market is reacting the way it is because the anticipation or the tone that they put out there about where we're going to be at the end of the year is wrong. And I think that's causing a lot of people to kind of reevaluate their situations and kind of price in higher interest rates and inflation thing and just kind of make account for what the swings and stuff that's going on in the market. So I do think that we're going to enter another period similar to this area right here. So this is pretty much right here before we got like the news of saying, oh, hey, look, the economy is back. We got a negative inflation report. Let's go. And then I think that we're going to like the next 30 days is probably going to look similar to this area right here where we have like these swings and rejections, but ultimately it's going to be like sideways movement. Why? Because we don't have evidence of a reversal yet, or even a time frame that we're going to start getting inflation and headed in the direction that we want it to go, obviously. So that's going to cause a strain as far as on institutional money, retailers and stuff like that, and trying to, obviously get the best deal, find out where their true bottom is, and they're not going to be, obviously investing in this market at least as heavily as they could, because there's no evidence that we're breaking trend here or things are actually going to get worse. So that's my outlook for like the next 30 days or so. Obviously, what the Fed says this week will have some effect. I do believe that a lot of it is already priced in, but that does not mean that they can come out and say, hey, look, we've been behind the curve for, literally a year. There was no inflation. Inflation was transitory. The economy was strong, blah, blah, blah. And we missed it every month. So this time, we were talking about a 0.75. We're thinking we should be more aggressive this time. Go ahead and do a full point, and I do not believe the full point has been priced in. So if that is the case, if they go that aggressive, then yeah, we can definitely see some further breakdown in the markets. So keep that in mind. But I do believe, again, I think that if you are considering getting in and in this period of confusion, I believe that we're going to see this period like we did back here in August, like the July period, until we get evidence of a direction with the inflation. So that means that where we are now, right around 6 cents, is typically outside of before we got into that period, this is typically where our bottom would be, and we would float somewhere around mid-level. So for those of you who were looking to allocate more money and looking to get in my opinion, anytime we're down here around this low 6 mark, that is ideal. Obviously, we will bounce up between like the mid-level and may even touch like 7 cents. The Fed likes to leak their reports and bullish things to kind of keep the market alive and stuff like that. So, but based off of history, right around this mark where we are now, that's where you're going to get the most bang for your buck. So just kind of consider that when investing. And as always, do your own due diligence here. The market is, I say for the rest of the year, you can expect a pretty choppy market, to be honest with you. Because it's just so many things that they were trying to lay out that's falling through. And I think that we're going to see some extreme swings here for the middle of the year as we try and find our footing on the macro level. So with that, don't forget, check out Moomoo. You get payment for order flow free trading. I have a link in the description section. Like the video, share it, subscribe, and I will see you guys in the next update.